During the month of September, the S&P has rallied from 6360 all the way up to the big 6600 strike just this past Friday, nearly 250 points in what is supposed to be the worst month of the year. So in this video, we're going to look at whether or not this rally can continue. And I also want to take a look at a couple of trade setups that we're looking at in Palantir as well as in Circle. Circle has been a hot stock earlier in the summer and it may be making a comeback. We'll take a look at that as well. But this is a huge week for the markets. We've got the FOMC on Wednesday. We also have VIX expiration on Wednesday, and it's also the big monthly September OPEX on Friday. So there's a lot to cover. Let's jump right into it. During Thursday's trading session, we saw a huge run up launching off of this 50-period EMA on the 15-minute chart, and then we saw some consolidation during Friday's trading session with the S&P basically flat, down 0.05%, closing at 65.8429. On Friday, we essentially tagged the 6600 level. I think we actually came to 65.99, but the 6600 level was our next upcoming target. So for all intents and purposes, we're going to consider this target acquired. One thing I want to point out though is when we take a look at the gamma exposure data coming into this next week, we still see large gamma exposure at this 6500 strike. So this could potentially be a pullback target at some point this week. A lot of times we do see volatility pop up during VIX expiration weeks. We also have the FOMC. So there's a number of catalysts that could cause the market to pull back. We think the probabilities are pretty high for a pullback into this 6500 level. And if we just take a look at how many times it's been tagged over the course of the past few weeks, back in end of August as well as early on in September, this has been a very important zone, being a major resistance point, which we finally broke out of at the latter half of last week. So a pullback back down into this level does make sense, and I think this would be a big buying opportunity if we did get back down to 6,500. Zooming out to our daily candlestick chart, if we just take a look at the overall picture, this is something we've been discussing quite a bit on this channel. Basically, the gamma exposure structure has been skewed up to 7,000 for the last several months, and we've been tracking this ever since the April lows, targeting the 6,000 level and above. And basically these targets have just been increasing as the market has ultimately been churning higher. We hit 6,300, 64, 65, and now 66 this past Friday. Every time we hit these target levels, we do see gamma exposure beginning to build at the next major strike. So for example, we are now starting to see 6,700 become a potential target into the coming weeks and months. And ultimately, I think a lot of traders are speculating for a year-end run-up towards that 7,000 level. So for our purposes, as long as the gamma exposure structure remains skewed to the upside, we're going to continue buying dips. As I mentioned earlier, the 6,500 level could be a pullback target. However, that would be a buyable dip opportunity as long as this gamma exposure structure remains intact. Let's take a look at our gamma exposure data graph. The two gauges we have at the top of our graph give us very important simple context into what kind of trading environment we are currently in. So looking at the S&P 500, you can see we have a strong positively skewed gamma exposure. It is near the far end of our range at 1.97 billion. So we'll see how that changes into this coming week. We also have extremely low implied volatility. Essentially what this number means is that implied volatility weighted for gamma exposure has only been lower 9% of the time in the last year. I know that sounds like a mouthful, but basically it's very simple. Low implied volatility, high positive gamma exposure makes for a buy the dip environment. So it doesn't mean that dips don't occur, but when they happen anywhere in the 1% to 2% range, or if it does get really deep, let's say into the 3% to 5% range, those are just bigger buying opportunities. And you can see this even clearer when you take a big picture look at the VIX. The VIX is now under 15. We have been in a volatility compression environment for the last 4 months, ever since the bottom in the market back in April. And this is exactly what we would expect to see in a positive gamma exposure environment like the one we've been in for these past months. Volatility compression coming down to these major gamma exposure levels on the VIX. Next, let's take a look at a couple of names that we are actively trading. I want to start with Nvidia. This is a trade we initiated back on September 3rd. Nvidia at the time was trading near its 50-day EMA, and you can see from our post the setup where Nvidia was trading just above the 170 level, and it was coming off of this 50-day EMA, and we were seeing gamma exposure starting to grow between 170 and 180, and even up here at these higher strikes towards 190. So coming into the bottom end of the trend, bouncing off of the 50-day EMA, which at the time was at 169.26. We thought this looked like a really good setup based on both the technicals as well as the positioning in the options market. Even if you just look at the options volume here, which is the blue bars on our chart, a ton of volume coming in at the 170 strike, but look at all the volume coming in at higher strikes. And this is usually indicative of market participants still speculating on higher prices, especially during pullbacks. So we took a very small trade. We bought one contract of the September 19th 170-185 call debit spreads at $5.20. So we're well into the money on this call debit spread. And let's just take a look now at what the gamma exposure picture currently looks like on Nvidia. You can see ultimately we did bounce higher off of this 50-day EMA after some consolidation. It took a few days for it to find support and its footing, but ultimately if we take a look at the gamma exposure picture overall, we're trading back near highs just above 180, so we're back approaching those levels. Gamma exposure is skewed from 180 and higher, potentially up to 200. Now, I don't think 200 is going to get hit next week, but what this shows is that the probabilities for a continuation move to these higher prices looks good when Nvidia is trading near all-time highs and the gamma exposure picture is skewed to the upside. So this is a name that we're going to look to lock in some profits this week and potentially roll out to a further expiration, maybe further up the options chain, targeting that 190 strike, perhaps into October. Next, let's take a look at Palantir. I mentioned Palantir at the beginning of the video as a trade that we were going to be looking to make. Palantir trading at 171.43, up 4.3% on Friday's trading session alone. It took a couple of weeks to consolidate around the 50-day EMA, which is currently sitting at 156.85, but broke out this past week into the 170s. Gamma exposure is largest at the 170 strike, and we see this skew up to the 200 strike. So it's a similar picture that we saw on Nvidia, basically a consolidation around that 50-day EMA, followed by a breakout in momentum with further potential upside. I think near-term pricing, of course, is going to be affected a lot by which way market momentum goes this week. Of course, we've got FOMC and we've got the monthly OPEX, but in general, market participants are still speculating for further upside prices in Palantir. So this is a name that we're actively trading, and we're going to be looking for another entry point on Palantir this coming week, which, by the way, you can follow along and track our trades in real time by becoming a member at geeksoffinance.com, or you can just check us out in our community Discord, absolutely free. Links in the description below. Next, I want to take a look at Circle. Circle has been in a big downtrend over the last several months, but it does look like it's potentially making an effort to break that downtrend. Gamma exposure has started to skew to the upside, especially up at this 150 strike. So that's a potential target that we are watching. Another interesting note is that we got up to the recent last highs just this past Friday and rejected. I'm looking for another move higher, basically breaking above that 135 level. I think if Circle can get above that 135 level, then it's off to the races to the upside. So that's something that we're watching for on this particular chart. You can see there's a lot of interest basically between 110 and 160. However, I've been watching volume the last couple of days, and we've seen volume increasing at some of these higher strikes. And in fact, we are starting to see the positive skew increase to the upside as well. And I think that's because we've seen some momentum come back just in the last few trading sessions to Circle. And I think there are many market participants that are betting that a potential rebound could be in play over the next couple of weeks. So that's another trade that we're looking at potentially putting on in our portfolio, something like the 150, 175 call debit spread out into October. There's a number of different ways you could play an upside move, and that's something that we're going to be discussing more in depth in our live stream as well as in our community Discord next week. And guys, don't forget, we are running a special promotion. You can get $300 off our yearly portfolio manager tier subscription. Use code September 2025 at checkout. We do have a few spots remaining, so definitely take advantage of this while you can. Members get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access, as I mentioned earlier, to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and strategies. And you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.